What's up, everybody? This is Jimmy with Trading Decoded. It is Monday, February 12th, 2024. It is 4:02 in the afternoon, and the market is officially closed. Oh, this morning was looking really rough. Fortunately, this time I think I was able to convince quite a few people to at least be patient, if not blue book it today. Now, for those of you who did blue book it today and walked away from the chart, I'm happy for you. Please don't be upset that the chart ended up moving, later in the day. There's no way to predict this, but if you know that you struggle with watching the chart while not taking a trade, and you find yourself taking trades that are not worth taking because of that, it's better that you walked away. With that said, we had some very clear lines of entries and exits. We had some very clean moves to the upside and the down, and you didn't even have to be aggressive to catch some of these moves. So we're going to talk about them. But more importantly, guys, I want to point out to you some things that you need to pay attention to that had you paid attention to them last Thursday, you would have seen a very eerily similar setup that we saw last Thursday, which crushed a lot of people. And what that was low volatility, low volume, tight ranging pre-market. Guys, the expected move today, which ended up being completely wrong, was about 35 cents as per the market maker's expected move that Thinkorswim uses, okay? I think that's the lowest I've ever seen it. Now, with that said, the pre-market was making me believe, hey, we should be a little bit cautious today, reminding everybody that, hey, if the market opens and contracts are cheap, that's usually a pretty good indication that the volatility is low, and it's going to take a lot more of a move to pay you what you're used to getting if you decide to trade this. Now, for me, I was not going to play calls or puts at open. That's why there's no call or put line on this chart. And I said to everybody, guys, I hope you're not getting stuck in this. We had some people play the open, getting a 30-cent move and really only making about what a 15 to 20-cent move would normally pay. So that was also an indication that volatility was low. But I said very clearly, guys, I'm not going to be interested in taking any position unless we get above or close above 501.65, so Friday's high of day. Then I'd be all puts or only puts, and I wouldn't touch calls. I would be in calls above 501.65, and I wouldn't be touching puts unless we can at the very least, breach 585, so this pre-market low line. It took a while. I just got done saying right around 10:37 that I'm most likely going to have a blue book day if we don't cross one of those two lines by 11 o'clock in the morning, because almost every day I'm done trading by 11 o'clock. So if I don't see anything I like by then, usually best for me to stay blue on the day, which again, a blue day is a no trade day. Wouldn't you have it at 10:44 in the morning, we finally get a close above the pink line, and I didn't take it. I wasn't prepared. I didn't have my phone in my hand. I wasn't expecting to take a trade. I got completely caught off guard with it. But fortunately, quite a few people in our community did play it. And we got a close above that, and we were looking for the move to continue up. And it did exactly that. Now, at this time, volume was starting to pick up, which was good. Volatility was starting to pick up. So the day went from something you shouldn't touch with a 10-foot pole to slowly into something that was worth trading. We were able to recognize that. And once that happened and we got out of the range that we wanted to get out of, we started to get nice moves. Now, let me explain, even though I didn't get to play any of this, very clear. And again, before the market even opened, I said, I'm looking for calls above 501.65, puts below 585. I missed the calls, and then I watched this massive move to the upside. It's frustrating. It's very frustrating, as a matter of fact. And it was a lot to not want to FOMO into a trade. But keep that thought in mind, because I want to share something with you on the way back down. But nonetheless, you got in here because we closed above it. Now, everybody asks me, Jimmy, why that line? Why not this line? Why not that line? Blah, blah, blah. Guys, my trading strategy that I use is very simple. The only time it gets a little bit more complicated is when I'm looking for reasons to get into that trade sooner, meaning more aggressively. Okay. In this particular instance, there was not enough potential movement in any break of any of these lines to make me feel good enough to try and play through the pink line, which was Friday's high of day. If we are trending up, which at that point we were, and we close above a line of resistance, I fully believe, not that it makes it a 100% chance to win, that the move is going to continue to the next line of resistance. That's it. Wait for a trend, wait for a close above or below a line of support or resistance, and assume it's going to go to the next one. Now, just because we assume and that it does work out to be the case very often, doesn't mean you should never not have a stop loss. But in this case, your stop loss would have been a candle close back below this yellow line, and you didn't have to get out of the trade unless you stopped yourself out. So what we do in these situations, because I'm trying to help people hold on to their trades a little bit longer than they normally do, because one of the complaints is I always cut my winners too short. Now, I knowingly cut my winners too short, and I do it all the time. I probably could have made triple the money that I made last year if I would just hold on to these trades and use stop losses to keep me in. I'm going to work on that, but I'm not really interested in changing what's working for me, so I wouldn't expect that to happen anytime soon. However, I could also help people do that for themselves, right? I'm trying to tell you what I'm looking at, what I think is going to happen as it's happening, because as you're in the trade, as well as you know as well as I do, we get tunnel vision. We don't have the ability, a lot of us, to look at multiple charts, to watch the cues, to see ADD. Where is it going? What's it going to do? Where's resistance? All these things. This is what I'm talking about through the whole trade, guys. So for anybody who bought calls because we closed above 501.65, we're looking for 501.92. If you don't want to take your profits there, you believe we're going to continue up, I would ask you to move your stop loss up to 501.74. That's where this is, this support. Okay, we get through it. Guys, we closed above the line. Now we're targeting 502.39. Okay, this is how it goes throughout the trading day. But right around here, while we were chopping sideways, I was asked, Jimmy, what pullback would you buy calls at if you were waiting for a pullback? And I said, I'd be looking for a pullback to 501.88. Why? Because that candle, prior to touching this line, was the last little bit of where sellers tried to push us down and buyers kept us up. Guys, you can ask people in our community, this was as talked about as clear as day. You see where that number comes from is right here. I know that seems insignificant, but that I even said I would wait for a little bit below the 501.92 line because we actually have what looks to be a little bit of support at 501.88. So that would be my pullback entry. That's why this arrow's here. Where did both of those candles bodies close? Right at 501.88. Now, the beauty is our stop loss for that trade was a candle close below these two right here. Okay? So you're talking about a 10-cent stop loss in an uptrend, off support, looking for the next move up. Now, at this point, we were talking about the idea that there seems to be a decent amount of sellers here. So if you bought in down here, you could have got your 20-cent move to here. That's why that circle there. But if you want to hold on to it, you know where your stop is. Let's see if we can ride it up. We got up. Okay, now I think at 11:17, Qs were running into a resistance at that time, and that's why that is there. Let's see. Nope, they were running into their day's resistance. That's what it was right here. Okay. Guys, as long as Q stays above 437.85 and you realize that there's resistance there, I don't know who's going to win the fight. I don't know. Okay, it doesn't matter to me. I'm just going to tell you, hey, Qs are at resistance again. We even had an alert set there so that the people who were in the SPY trade could know where to get out if they were respecting the Q's resistance. Okay, we end up closing above that line, holding it as support, and up we go. Now, once again, why here? Why here? I'm going to tell you why here. Not only did we create a resistance up here, we start talking about potentially wanting to exit these trades when we start to see wicks like this, guys. When we see wicks like this, or when we see wicks like this. Okay? This is just an indication that there's some opposition to the move that you're in. Doesn't mean that you have to get out. It certainly doesn't mean that the opposition is going to win. Okay? But just know that it's there so you can be better prepared if they do win. Okay? You don't want to be caught off guard in the middle of a trade. Now, with that said, we hit a similar resistance up here. All right. Qs had just touched their next resistance line that I had on the chart. Take a look at 1138. Again, we have an alert set at these things. Do you see this, guys? 1138. By the way, I'm drawing all these lines here before the market opens in all-time highs. So these are all levels that we're calculating, and still look at how well they work. So respecting support and resistance is terribly important. I don't want to say it's terrible, but it's very beneficial for your trading account, okay? But I want to show you guys something. Look at this line on the day. Every time we touched it, I'm going to squish it up a little more because there's one more good time that we touched it. Look at that. So anytime people wanted to buy calls in an uptrending day, you better respect that resistance. Okay, at least know it's there. That's all I could say. We pull back, and I'm at lunchtime somewhere in this range, so I missed this rejection here. I got back somewhere around somewhere in here. 105, 112, I don't remember, 115, somewhere in that range. But coming back, I said, oh, guys, look, SPY did some silly stuff while I was gone, only to be right back where we left it when I left, which was right around here. I said, if you're in calls, you might want to consider taking your profits up here. Why? Because every single time we've touched it today, it's resulted in a move to the downside. That's all I go by, guys. I'm not interested in the what if it goes in my favor. I'm telling you what has it done every time it's touched that level. You've got to let go of what you want. Okay? You cannot do or expect what you want. You have to understand that you want it to happen because you stand to lose if it doesn't. You're emotionally invested in the trade. I am not. I'm not in these trades at this point. Okay? I'm not in any trades at this point. So I can tell you with good conscience, guys, just a heads up, we've broken this resistance level exactly 0 times today out of the however many times we touched it. Just putting it out there, you do you with your money. But I'm just giving you a heads up in case you missed it or ignored it. Then we start moving down. Now, would I buy puts up here? No. Would I buy puts because we closed below this one? No. You have all kinds of support levels you got to worry about. Right here, right here, right here, the yellow line, right here, right here. Guess what doesn't exist below that line? Look at this, guys. That's your first opportunity to make it down to the yellow line. Is that more than 20 cents? You're damn right it is. You're damn right it is. It's 30 cents. Okay? Wait for a breach or even a candle close below that support, knowing that the next one down is this yellow line. We breach, you get in early. We close, you get in there. It doesn't matter. Where does it go? Right to the line. Tries to hold that line of support. At this point, I tell everybody, hey, if we close below 502.39, I'd expect this thing to move down to 501.92. But we might find a temporary support right here at this right here. The 50, what was it, 17? 502.11. So if you played the close below support, 502.11 was the first support you're going to run into. You want to hold through that. The market's looking pretty good. Qs are moving down swiftly. Let's do it. I mean, we never even got a green arrow all the way down. So the Jim indicator called the top perfectly. And down we go. We just needed to wait for us to clear through a bunch of supports, close below support, and have enough room to justify the attempt to trade the downside. There it is. All right, fine. What's happening at this point? Qs are very close. In fact, Qs just touched a support line at 139 in the afternoon. Let's see where that is. Right there. Guys, I don't know which of these levels we're eventually going to hold. But we got into this trade because we closed below this. And I said, hey, we got some room to move down on the Qs. If you're going to stay in your puts or take puts, it won't be because the Qs don't try and make it down to their next support, which they did. And as soon as we touch that support, I tell everybody, guys, cues are on support. You might want to consider taking profits here. If you don't want to, it's on you. Just a voice of reason. It found support. SPY pushed down a little bit more. And then we have a flag play. Now, you're not going to see a white arrow here. This is a flag play, perfect flag play. However, I prefer to get into my flags when I'm close to a resistance line or a level of resistance. In fact, I was telling people I'd much prefer take this flag at 502.45 because not only would I get in here at resistance, I would have a stop loss that's pretty close to my entry point, just 9 cents above. I'll take that risk. Okay. We didn't make it back to resistance. So the problem is if you buy here, you would have to use this as your resistance, which would have been okay. But if it gets through that, your next safety point is all the way up here. That's too much for me. So this trade was not a good trade for me, but we did talk about it in advance because I do have flag players in the room and I wanted them to be aware that, hey, this is a flag. We're clearly trending down. We're pulling back. We need a candle close below this trend line, and that would be your entry for a put. Okay. Stop loss, very least, should be here, 502.19. So even if you got in at 502.03, that's a 16-cent stop. It's within the 20-cent range. There you go. You stay in this trade, we get lower. The thing obviously pays out massively. But unbeknownst to me, my feelings of having missed a great opportunity to the upside because I had said I'd talked myself out of trading for the day. I very quickly, well, not quickly, but once we started to have a nice sell-off and move to the downside, said, I watched one opportunity pass me up on the day. I'm not going to watch another one. So our put scenario from this morning was getting below those two double bottoms right here. Okay. $500.85. $500.85. Now we have people get in before that because, well, I mean, Qs were just doing their thing and breaking down. And it was a beautiful situation, right? And so I got into those trades. Late day trade for me, it's something I usually never do. But I got to tell you, between here and when we got out, and the reason we got out here and not at any of these lines, I'll show you now. Right there. Q's hitting a support line. They had just cracked through. I said, Q's got room to go. If they make it to the next line, that's what we'd be interested in getting out. So the Q's broke that support at 218, which coincides with SPY doing so. And we got out at 220, which is when Q's touched that support level. That was an 83% trade, guys. Late day move, very quick, volatility spike, volume spike. I don't trade volume. I found out later that this happened to be the highest volume candle of the day, apparently. Pretty cool. But that must be what caused the volatility spike for that those contracts to make a big jump in price. But anyway, we got in, we got out. It was a beautiful thing. And that was it. I didn't suggest anything else after that because I'd left at 2:40 to go pick up my kids from school. And I didn't get back till, I don't know, 3:52 or something like that. But SPY got back into a tighter range near the end of the day, and that was it. So the key takeaway from today was a lot of people blue booked it today or stayed out of the market because of what happened to them on Thursday. And my point for this video is the couch was in the kitchen. And if that doesn't mean anything to you, it's because you didn't watch my video from last Thursday, February 8th. The couch was in the kitchen this morning, guys. Okay. Go watch that video if you haven't. SPY was very, very non-SPY-like this morning. And thankfully, we trusted that because this was not a good paying market until we got out of the range, which ultimately we did. Okay. So avoid trading at times that are not beneficial. Be patient enough to wait for times that are beneficial and execute when you're supposed to, not before you're supposed to. All right. Keep yourself out of trouble, guys. With that, we're going to wrap it up. Hope you found some useful information in this video. If you did, please like, share, and subscribe. I'd appreciate it if you do so. If you'd like to join our Discord community, well, it's a pretty great community. There's links down below. We'd love to have you. Jump in there. First week's completely free. And we go over the charts in real time all day long. There's 2 trading rooms there. One that trades a 920 strategy and mine that trades support and resistance. Both very educational and very useful and very helpful. Okay. Also, check out our website at www.trading-decoded.com. And that's pretty much it. So hope you all have a great rest of your day. I'm going to go meet a couple of our members for dinner tonight. And yeah, we'll get back at it tomorrow. Thank you guys for watching. I love you all. Till tomorrow.